All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. Obviously the first thing I need to do is I need to get my bias chart together, and we need to get through these charts. Taking a step back and seeing kind of where we're at, what's happened over the course of the last week or so has been really interesting. As I told you that the dollar index, I mean, we've made a real big breakout above this triangle, and it's been pretty bullish. Now, one of the things that I've noticed, just looking at this dollar, and we're gonna go with the euro here in just a second, but we pushed in a new highs at the very end of this last week, and relative strength didn't. This is a 4-hour chart, and you'll notice that we're a little divergent there as the dollar, as dollar is breaking out. In other words, I think this dollar move that you're seeing here, like Paulie said, probably needs to correct a little bit. But I don't know if I would necessarily stand in the way. It looks pretty strong, so you got to be somewhat careful about trying to step in front of the move at this stage in the game. Okay, I think that any type of pullback is going to be met with buyers. So there are obviously there's people that are stuck short the dollar at this point that probably won out, and so my assumption is that that the move that we're seeing here, even though may come off, you're going to find buyers, and that's why we have to look at like the euro in that scope, in my opinion. All right, so with the euro dollar, and by the way, I was looking at what we got today. In this week, kind of get my head around everything that's happening this week. So we have today. We have Empire State Manufacturing. We got some Canadian foreign security purchases data, capacity utilization, industrial production. Stanley Fisher speaking a little bit later, and then that's for today. We have New Zealand CPI a little bit later tonight. Monetary policy meeting minutes out of Australia. Tomorrow we've got CPI, so inflation data is going to be pretty important for the U.S. tomorrow. We have Chinese data that's coming out now. Chinese GDP and industrial production will be tomorrow evening or early Wednesday morning in China. Wednesday we have some employment data out of the UK, which obviously the pound's trading really weak at this moment. We have the Bank of Canada rate decision, where the Bank of Canada is expected to keep rates unchanged. Interesting thing about the Canadian, it's been strong, much stronger than would have anticipated with this dollar move. So the Canadian dollar has been doing relatively well, which we'll obviously talk about today. We have Australian jobs data coming in on Wednesday night. On Thursday, we have unemployment claims. We have the ECB rate decision on Thursday. We have Philly Fed on Thursday, some housing data on Thursday, and Friday we have Canadian inflation data as well. So it's going to be a pretty good week. No real, aside from the ECB meeting, which is going to be a highlight this week, here in the U.S., no real top tier data, just some kind of secondary data, and maybe it'll confirm a little bit whether this dollar moves for real or not. But what we've got to do is we've got to take a real good look at these charts now, and you also have to keep in mind I haven't drawn on these charts for a week, so you could see that since I've drawn on the euro dollar, we've actually broken a lot of key support. Okay, so I think what we should do at this stage is let's go ahead and you know what I'm gonna do? I'm gonna get rid of everything here. Okay, so first and foremost, let's do this, just so we're real clear on all of the lines pitchfork that we had looks, oops, basically like that. Let's get rid of that. I was getting my head wrapped around all the, moves that we've had. Okay. Now let's zoom out a little bit on the daily here. Um, okay. Obviously, at this point, you look at the euro dollar, and we're trading below 110, and that's obviously been a pretty bearish event. I mean, this move right here, when we cleared all these, we cleared this trend line here. That breakdown's for real, because once we broke it, we even retested it, and we've failed to even take that out. So one thing that I noticed just from the last fib that I drew out, we're at the 88% retracement. So if you take this low to this high right here, okay, there's your 88% retracement of this move, right? Okay. So what that means to us is this support right through here, 109.50, is a pretty big deal, because if this breaks, we're going to new trend lows and then beyond. And I'm not saying and beyond because I have Buzz Lightyear in my head, but I might actually have Buzz Lightyear in my head. To infinity and beyond. Okay, so I spent way too much time at Disney. Yes, I did. Okay, and you can see right here, there's your 109.40 level. All right. So, and that's the 618. So you can see how significant this low is going to be. I mean, that's a big deal. I doubt we're going to break it today, unless we have like just blowout data at this point. Let's take a look at these lows. 109.51. Yeah, so I'm going to write down 109.50 as being a very significant support today. 1.0950. That's going to be really important support today. Now, as we were looking at the dollar, trying to figure out, where the dollar might retrace to, that's going to be probably pretty key here, because you don't want to short the dollar as we're, or short the euro dollar as we're, trading down at the support. You want to try to, sell some sort of rally. So let's see here. Now, 110.55 or 110.60, and even a retest of the underside of this trend line takes us to 110.75. So I would say at this stage in the game, if we can get a rally back to 110.60, that'd be a great area to be on the short side of the euro, wouldn't you say? If we can make it up there, I think you got to look at it with obviously a bearish spin at this point. If you guys haven't figured that out already, the dollar's really strong, but selling into this weakness doesn't make a whole lot of sense to me. What I would make more sense is getting some sort of rally up here and trying to get short up there if possible. I don't know if the market's going to give us that type of opportunity, and the reason why I say that is because you have You have a situation where the dollar is in breakdown territory. Everybody wants to be short the dollar. So, any type of, like I said, any type of rally like that, it's probably going to find some sellers. That would be my assumption. Okay. Um, okay. Let's go over to the pound. All right. So here's the pound dollar. Now, pound looks really weak, but um, what is this here? Why do I have all of? Okay, let's get rid of all this stuff. These are all obviously the lines from last week. Oops, didn't want to do that, but I did it. So I'm gonna have to figure out what I just removed. Okay. Okay. So here's the cable. Man, look at this thing. You know, this pound, I think one of the things that's so bearish at the moment is the fact that we just broke, see this triangle here? So the pound, I mean, you think about how limited any type of rally is here. In this situation, um, as long as we stay below 122, there's no reason to be long. I mean, none, none. Even if you think there's a bounce coming, even if you think there's a bounce coming, until we can take out this trend line here, we just broke out of a triangle, right? So this low here was 2132. Overnight low is 2135. So this 2130 is vulnerable, okay? Right there. And in my opinion, while we stay below 122, I mean, it's just, you know, waiting for a breakdown, okay? So, I mean, I'll write down 121.30, but if we break that, then the next support is 120.90. Jeez. Okay, so we have 120, whoops, 120.90, 121.30. All right, and obviously bearish. Looks ugly. God, pound looks ugly. I mean, look at that thing. I mean, now you're probably looking at relative strength and going, well, Blake, it's breaking down. Relative strength isn't even breaking down. Here's the thing. Relative strength is almost neutral on this move lower, which now opens it up for a further downside. Like if we want to just turn lower in the cable and break down, there's nothing really stopping it now. Like we can, like RSI right now. Let's pull this up right here. RSI can actually push lower like this without any issue. Like we've worked off our oversold conditions on this 4-hour chart, and we can just plow lower if we want to. No problem. So for those of you that think that it can't go lower, very easily can. Very easily. Okay. Um, let's go over to the Swissy. So the Swissy, by the way, is in breakout territory. I own the dollar Swiss, just so you all know. I saw it breaking out on Friday, and I bought some. I'm like, I'm like, how can I not own the dollar Swiss? Now, I may not own it at the best price because I don't. I own it at 99 cents, but it doesn't matter to me. Now that we trade above 98, this here, let's get rid of that, and let me just go ahead and move this. I knew it was breaking out. I mean, and like I said, I'm like, it doesn't even matter to me at this point. You guys know that I've been waiting for this move above this channel. So now that we're above this channel, and while we trade above 98.40, actually you could probably even take it down to 98, but I'll just say for today 98.40. No reason not to be long, in my opinion. The only thing that I worry about is that the market becomes too risk averse and they start buying Swiss francs. But that is support at 98.40. Okay, that's support, and I'll write down resistance as being these recent highs at 99.10, and then beyond that, we have to look at beyond that 99.10, and then beyond that will be at 99.50. This thing's bullish, guys. You understand that we'd been in a channel for the last 12 months, and you do understand that we are above every downsloping trend line now in existence with the dollar Swiss. Every one of them. Like, there's not one that we are not trading above right now. Like, you can do here. I'll delete all this stuff, but you can do that. You can do that. Well, actually, I guess there is that one that would be still need to be taken out. But I mean, we're now, we talked about making higher. We were making higher lows and lower highs, but now that has changed. We're now making higher highs. So we're now changing the structure of a pair that has been bearish to bullish now. So now a break above this 99.50 would be extremely bullish at this point. Okay, so right now we have 99.10, which obviously is a bit of an issue. 99.50 would be major. Okay, and that's the high from right there, 99.50. All right. Okay. That is bullish. Now let's take a look at the dollar yen. Okay. Dollar yen. So the dollar yen, obviously we broke out, a couple weeks ago before I left. We broke out, and now we're just holding up. Now, Paul made a good point. Bonds are breaking lower. Dollar yen isn't breaking higher, which doesn't surprise me. But I picked up the dollar yen last week, and I own it at 103.75. I own it, and I actually want to add. I haven't though. What I'm waiting for right now at this point, and you guys know I'm bullish dollar yen. Now, Paul thinks the dollar yen is going to come down. I hope it doesn't. Okay, but as you guys know, I'm bullish the dollar yen. And what's really interesting about the dollar yen is that if you look at the S&P and what's happened with the SPOO. So let's go. Let's put in the. Okay, even with the S&P coming off this last week, you can see the S&P breaking lower. we didn't have a breakdown in the dollar yen. It's just kind of prohibited the dollar yen from breaking higher. Um, I like it. If stocks can't tear this thing down, then in my opinion, it's just got one direction really to go at this point, and that's up. Now, does that mean we're going to break higher right at this moment in time? No, I mean if bonds, if Paul's right and bonds pull back a little bit, maybe the dollar yen does pull back, maybe to the support here. Maybe we pull back towards, let's call it like 103.70. Well, we have 103.79 there. Maybe to 103, maybe 103.70. But I think any dip down to 103.70, you want to use that as a buying opportunity. Okay, so 103.70 is support, and like I said, I own it at 103.75, so I'm long. And if it breaks down towards there, fine, so be it. I just add to it. Okay, now it would be very bullish if we break above, this resistance here, or more importantly, that resistance here should be at 104.60. I'm going to write down 104.60, but I think if we take out 104.30, it's going to be pretty bullish as well. I think it'll kickstart it. So 104.60, and it's bullish near term. Especially, sorry, didn't mean to yawn on you guys. Especially while we're above 103.70. All right, now let me see if I can do the Canadian really quick. I know I should be taking a break right now, but I'm gonna squeeze out the dollar Canadian. All right, here's the dollar CAD. I'm really surprised at how weak the dollar Canadian is. I mean, crude's bouncing right now, but crude's failed to take out that $51 level last week, and crude has that inverted head and shoulder pattern. If you guys don't remember, it's still rejecting the neckline, and I thought the rejection of the neckline would have shot the dollar Canadian back up to 133. It hasn't, and I'm surprised, frankly. This is the one this is kind of like that pair that I sit here and look at and go, huh, why isn't it higher? And I haven't been able to figure that out. But I think what we can do is we can look at it and say, all right, well, while it's below this 131.80, we got to be really careful on the long side of the dollar Canadian. Okay. So 131.80 is resistance today. Now we do have the Bank of Canada. We have the BOC rate decision on Wednesday. Was it Wednesday or is it Tuesday? It's Wednesday. Okay. So we have the BOC rate decision, and that'll probably give us some better idea of what to do with the dollar Canadian. All I know is I don't know what to do with it right now. I look at it and I go, doesn't make a lot of sense to me. I don't necessarily want to be a buyer. I don't want to be a seller because I'm a little scared of shorting the dollar at this point. Doesn't matter what I'm doing. But the dollar Canadian hasn't been performing like other dollar currencies, and that we should at least note. Okay. All right. So it looks like the 618 is holding here. So I'll just go ahead and write down 131 as being support currently. Resistance of being 131.80, and I think we just kind of leave it alone. If we get a dip down towards 131, you might be able to pick it up. If it rallies to 131.80, 131.85, if you guys are still for whatever reason dollar bearish, maybe short the dollar Canadian up there. I don't. All I know is it's not jiving with the rest of the dollar pairs at this point, and that has to be noted. Okay, I'll be back in a few moments. When I come back, we will continue on with the Kiwi, the Aussie, dollar index, peso, Nordic currencies, all that fun stuff. Don't go anywhere. Thanks for being here. Happy Monday. Hi traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. So, looks like we need to, we need to finish up everything here. The market's actually pretty quiet at the moment. Cable's still extremely weak. Yeah, I'm surprised that the Kiwi is as strong as it is right now. I'm not too sure why it's been outperforming the last couple of days. And same with the Aussie, but let's take a look at them. So the Kiwi we still have this head and shoulder pattern, so nothing's changed. But this is all going back to, again, I haven't adjusted anything since I left town. I haven't messed with these charts at all, and you can see since we were back here, looking for a rally back to the neckline, back to 72 cents, maybe 72.20. We rallied close. Close. We got shy of 72 cents, and then we started coming off. Right now, what we did do here. Let me get rid of this. Let me get rid of that. Okay, so what we did do is we hit basically the 161% extension of the. This is the head and shoulder pattern. Hit the 161% extension, and we bounced. Now, we have gotten to a point where I'm actually interested in shorting the Kiwi again. I haven't done so yet, but I am interested. I think this is a value area to be on the short side of the Kiwi. Because I still think we have our head and shoulder pattern that we're attempting to complete. So let's just drag this across. Whoops, not that. Let's get rid of that. Let's grab this. Okay, and we can say, all right, well, there's basically the neckline. All right. Now what I'll do is I'm gonna draw a couple fibs. One being from where we started this arm, and then this one from over here, and I'm going to see where we match up at. So where do we find some sort of confluence cluster? All right. So we're at almost a 50% retracement of this move. Oops, all the way down here. It's basically a 50% retracement, almost a 618. I'm going to draw now from where the move started over here. The 38% retracement comes in right at the 618 here, which will be 71.40. So, in my opinion, any move to 71.40, I'm a seller, because that's what I'm just looking to sell this thing. It's just trying to find that good price, and looks like 71.40 is going to be the area to be a seller. Okay.
Hey, Blake.
Yes.
The reason the Aussie rallied was on Friday. We got the Chinese data, and it was the first time in 5 years that producer prices increased. That's why we saw so just as a heads up, so you may want to just be a little bit cautious as you try and take them on. But that's the reason why. First time in 5 years, producer prices have increased in China.
Oh, okay.
I just wanted to cue in real quick just to give you a heads up on that.
Okay, that's good to know. And maybe that's why the Kiwi is outperforming. It looks like the Kiwi is a little bit more sensitive to this Chinese data than the Aussie, in that respect. So, so thanks, Paul. And by the way, just so you guys know, I sold my Aussie New Zealand. I sold my Aussie New Zealand at 107.02. And I sold it before it got to this 107.50 or wherever we were at on Friday. I sold it here, like somewhere around here. Okay, I am looking to buy it back, just FYI, but not at this very moment in time. But can you guys believe it? Wait, by the way, how many of you guys were or are still long the Aussie New Zealand? I sold mine at 107, and I remember I've been buying since about 103. So hopefully you guys did really well. Okay. Good, good. It looks like a lot of you guys did well with it. Awesome. Paul sold at 107.20. Very nice. Yeah, I missed part of it, but yeah, I was on vacation. Come on, give me a little bit of a break. All right. Let's go over to where was I at? Kiwi. Okay, still doing the Kiwi. So, where's support? So support for the Kiwi dollar will be right here. That's obvious. Okay. Resistance is right here. So I just want the Kiwi to tick up just a few more pips. I'd love to see it break these highs right here at 30, just to squeeze a few people, and then I'd be a seller up there. 70, 75. I just don't know if we're going to be that lucky. 70, 75 will be support. Okay, let's go over to the Aussie dollar. So here's the Aussie, and I guess we had these producer prices that came out a few days ago. Did not know that. The Aussie's getting a nice little lift. Futures are also, bouncing. We were down 50 when I stepped in. I think we're only down 15 right now. So here's the Aussie. Interesting. So look what the Aussie did. Isn't this interesting? Look, here we are. I'm going to delete this really fast for now. Delete that, delete that, delete this, delete that, delete that, and take this. Let's take this. I just sneezed, and fortunately I hit the mute button before I could sneeze. Woo! It's allergy season here in Phoenix, by the way, which I have a feeling I'll be on allergy medicine for the next month, just so you all know. Change of season. All right, so we're still in the apex of this triangle, right? And notice how well we held triangle support. See that? Amazing. It's magic. So, definitely don't want to be short the Aussie yet. Well, I mean, I don't know where I want to be short the Aussie. I don't know that. And then on top of that, we have Australian. We have a ton of Australian data. We have monetary policy meeting minutes later tonight. We have Chinese data tomorrow. We have employment data on Wednesday. So there's a lot that can influence the Aussie right now. I don't know if there's anything really to do at the moment with the Australian dollar per se. So again, I don't know what to do here. So 7650 is resistance. It's the obvious, but I don't have anything less than obvious. I wish I, found something that was less obvious, but that's just pretty obvious at this point. And this is obviously support. You can see all coming through here. So I don't know what to do with the Aussie at this point. I don't think there's much to do with it, actually. I mean, 75.80, 76.50. 75.80, 76.50, and we are still in a range. It's kind of like the Canadian. It's like, what do you do with it right now? Nothing. Okay. let's go over to the dollar index. So the dollar index has been, obviously in breakout territory. Like I said, I hope you guys just, one of the things I was thinking about, while I was on vacation is, man, I hope the webinar folks are not short the dollar. Because, I mean, the dollar's been, nonstop, pretty much just a real bullish move. Question is, what do you do with it now? I mean, I don't know if there's a whole lot to do with it at this moment other than, we have a lot of support down here. And so we have, I mean, 97.45 is support. Resistance is, I just have to mark up the recent highs. I don't have anything else to really go on. The 127% extension wants to get hit at some point, which is up here at 98.55. I don't think we're going to do that today necessarily, but 98.15, 98.20, 98.20 resistance. 97.45 is support. 97.45 and 98.20, and it's bullish. I mean, you just want to be a buyer of dips. I don't think that you necessarily want to buy the dollar now. You just want to wait for it to dip back down towards support to be on the long side, right? Okay, let's go over to the peso. Now, one of the things that has been surprising to me, and I have noticed this, and this is just again from me taking a step back, is if you look at the peso, I'm surprised that the dollar peso hasn't gone higher. Now, the reason why I say that is because the market has been kind of risk averse this last week. It's not like the market took a complete nosedive, but the stock market has been weaker. We've had, if you, again, you go look at the S&P here, you look at the S&P and you go, okay, well, over the course of the last week, we've broken out of this triangle. Here's our triangle in the S&P. We had a, whoops, don't want to do that. Let me grab try this again. Okay. Damn it, man. I don't have the touch. There it is. Okay, the touch. There it is. All right, so we had this false breakout right here. Okay, we had this false breakout, then we broke down. We break down, you expect in this situation, as the stock market comes under pressure, you expect the US dollar Mexican peso to rally. Well, it didn't. The peso actually went lower. Now, I would have expected it to go higher. I'd expect us to be closer to 20 at this point. What that actually tells me is we're probably a lot closer to a high, like a significant high. We're probably fairly close. Doesn't mean that we're going to hit a high right now, and doesn't mean I want to short the US dollar Mexican peso right now. But what I'm thinking is, if the stock market comes back under pressure, like let's say over the next 2 weeks or so, and the US dollar Mexican peso rallies towards 19.50 or maybe even towards 20, I am going to be a seller up there. Okay. Now, I don't know what to do with it at this moment. So we've basically been holding a 50% retracement. I would say this area, hold on, let me get rid of this. I need that for now. This area, is obviously support. You have a 50% retracement. We're holding like these spike lows right here. It's really kind of bouncing around. I mean, if we break through 1870, what is this, 78? You know, that'll take us maybe down to 1850. You know, somewhere 1870. You know, we could possibly break a little lower. Um, nice gap here. It still needs to be filled. So currently, I'm going to take this out. Currently, resistance at 1908. So if we can break above this 1908, we'll fill this gap over here at 1930. That might be a nice place to be on the short side of the U.S. dollar Mexican peso. But I don't think there's anything really to do with it right now. I don't see any real reason to trade it. Okay, let me try to get these last two out of the way really fast. Norwegian krona. So the Norwegian krona, we had that false breakdown before I left. It's created that squeeze, which we knew that was going to happen. You guys remember us talking all about the false breakdown. And it created a hell of a nice squeeze. I mean, it really did. Oops, keep pressing the wrong button here. All right. So move above 825. Would be pretty bullish. That'll allow us to move up towards some of this resistance, but I really don't know what to do here with the US dollar Norwegian krona either. Have to get my head wrapped around what's happening here with this Norwegian krona, because one of the things that is very significant to me is what's happening in the Swedish krona, which I'll talk about here in a second. But I'm just going to write down 813 and 826. Oops, this is range. 813, 826. It's a range. Okay, let's go over to the US dollar Swedish krona. Now this is the big deal. This is what's happening right now. This is the one that I think you need to keep your eye on. So US dollar Swedish krona is above our, I mean, it broke out. Look at how I'm gonna redraw everything. So let's drawing, remove lines. Okay, so let's do this. Okay, let's remove this, or let's copy that and put that there, and let's realize that we're breaking higher. Okay, now $888, huge resistance. Okay, so the high here, 888.36. The high here, 887. So 888, I'll write down as major resistance. 8.8800. It's major resistance, and the reason why you should be paying attention to the Swedish krona is because the Swedish krona, like the Canadian, in some sense. These are leading indicators, you know, in my opinion. When you're looking at the dollar and you have the Swedish krona breaking higher like it is, that may drag the rest of the dollar index higher. So as long as we stay above 870, should be right there. This thing's bullish, and it looks like we're going to break higher. Obviously, we can set up a double top too. I mean, if we turn back lower through here and we break back below these lows, then you got a double top. But man, this thing looks bullish right now. Okay, there's your bias chart. I'll be back in a few minutes, and then we've got data coming out. We have Empire State Manufacturing. So don't go anywhere. See you in a few.